Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing from Abacus Global Management. It might sound like just another dry financial document, but trust me, there are some interesting numbers and decisions buried in here that could impact the company's future. Let's see what Abacus has been up to. It's going to be a wild ride, so buckle up. This is a current report, basically an update about important events. The key date to remember is, because that is when all this news is coming out, Abacus has a few different types of securities traded on the Nasdaq stock market. You have the regular common stock with the symbol ABL, warrants with ABLW, which are like options to buy the stock later, and some senior notes due in 2028 trading under ABLL. The main event is that Abacus announced how well they did financially for the entire year ending in December 2024. They released a press statement with all the information. We are going to check it out. The report includes their press release about the financial results. It's important to remember that this press release is being furnished, not filed, which means it is presented but not officially part of their required filings. Before we dive deeper, a quick word on forward-looking statements. Basically, Abacus is saying that anything they predict about the future might not actually happen. There are risks and uncertainties, so don't take their hopes and dreams as a guarantee. They point you to other reports like their 10K and 10Q filings for a more detailed look at potential risks. The report was officially signed off by Jay Jackson, the Chief Executive Officer, as of March 28, 2025. Now that we got the basic overview out of the way, let's get into the numbers in the press release, Ixion. Alright, let's analyze what all this means for Abacus Global Management. The company's press release highlights their financial performance for the year 2024. Let's see the key performance indicators that can help us assess how the company is doing. Abacus saw its revenue climb to $84.7 million for the year, which is a decent increase from the $69 the prior year. It means the company managed to sell more of its services or products this year. That could be a sign that demand is growing or that they're doing a better job at attracting customers. The company experienced a net loss of $6.9 million, which is better than the $12.5 million loss from the previous year. While still a loss, the decrease indicates they are managing their costs more efficiently, or that the increased revenue is helping to offset expenses. It means that the company is on a better track compared to the last year, even if it's not yet profitable. Their adjusted EBITDA, which represents earnings before interest, taxes, depreciation, and amortization, and adjusted for certain non-cash and non-recurring items, grew to $13.9 million to profit. When you strip out some of the accounting complexities, gross profit rose to $36.66 million from $29 million in the prior year. It is the difference between revenue and the cost of goods sold. Increasing the gross profit means that the company is becoming more efficient in either producing its products or delivering its services. Now, let's look at the highlights from fiscal year 2024. The company mentions that they continue to execute on their growth strategies to drive growth in assets under management, or UMIUM, refers to the total market value of the investments that a financial institution manages on behalf of its clients. The company repurchased and retired $15.3 million in principal amount of its 9.875% senior notes due 2020 at a discount. By repurchasing and retiring these notes at a discount, Abacus is essentially reducing its debt at a favorable rate, saving on interest payments and improving its balance sheet. It means that the company is healthy enough to manage its debts and has confidence in its future cash flows. The company increased its term loan by $15 million December 2024. While paying off some debt, Abacus took on more debt, which can be a double-edged sword. On one hand, it provides capital for growth and operations. On the other hand, it increases financial risk, especially if the company struggles to repay the loan. Let's look at the balance sheet highlights to get a better picture of the financial health of the company. As of the end of the year, Abacus had $5.8 million in cash and cash equivalents versus $1.4 million at the end of the prior year. This increase in cash position suggests that the company has improved its liquidity, making it easier to meet short-term obligations and invest in growth opportunities. The company's total assets were reported as $159 million, up from a year earlier. It shows that the company has accumulated more resources which can be used to generate revenue and profits. Finally, the total debt was $118.05 million compared to $118. So while they have been paying back some debt, they increased other debt. The overall increase in debt indicates that the company is relying more on borrowed funds to finance its operations and growth. This can amplify both risks and potential returns. Let's step back and assess Abacus's overall position based on these numbers. Abacus is showing signs of improvement. Revenues are up and they're cutting down on losses, which is good news. Plus, they're managing to increase their earnings before all the complicated accounting stuff. That said, the debt is a bit of a worry. They're taking on more debt even as they're trying to pay some off, which could put them in a tricky spot if things don't go according to plan. One thing that stands out is their focus on increasing assets under management. If they can keep growing the amount of money they're managing for clients, that could really boost their long-term profitability. Also, their buying back and retiring some of their debt shows they're thinking about their financial health, which is always a plus. Looking ahead, Abacus needs to keep an eye on that debt load and make sure they're not overextending themselves. But if they can keep growing revenues and managing costs effectively, they've got a decent shot at continued improvement. Overall, I would say Abacus is showing signs of strength, but they're not out of the woods yet. They need to stay focused on their growth strategies and be careful about managing their debt. Thanks for watching. If you enjoyed this analysis, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings.